To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.
Hello, people. Once again, we meet with a paper, a provincial paper. This is the 2019 Northern Province third term paper. I'll tell you again, this is the 2019 Northern Province, North, Northern, North. I'm going to write it down, 2019, Northern Province, NW, third term paper. We started this and did one chapter. We started this and we did one chapter, the first chapter, which means from the first question, 16 questions. Yeah, we did from the first question, 16 questions, and we finished the first video. Why we finish the first 16 questions in the first video? Why? Because the first 16 questions are from the business studies part. From the 17th question we start today, that is the accounting part. From the 17th question up to question number 40, all questions are from the accounting part. Rightio, I'll start from the 17th question. Some characteristics of accounting elements are given below. Some characteristics of accounting elements are given below. Accounting elements. A. Inflow of future economic benefits. Inflow of future economic benefits. B. Present obligation. C. Outflow of future economic benefits on their settlement. So we have A, B, C. A says inflow of benefits, future. In the future, we are expecting benefits. B says present obligation. Present obligation. Obligation means it's a responsibility, like we are bound to pay. Obligation. We are bound to pay. C says outflow of future economic benefits on their settlement. Question is, answer which consists of the characteristics of liabilities. Answer which consists characteristics of liabilities. Right? Characteristics of liabilities. Now tell me. You tell me, you. Characteristics of liabilities. Is it like a liability gives you inflow of future economic benefits? Does a liability give you your business inflow? No. No inflow. Outflow of future economic benefits when the liabilities are settled. Settling means you have to pay back the liabilities, you have to pay back the loans. When you are paying back the loans, your cash flowing out, it's an outflow of cash. So outflow of future economic benefits. C is correct. An obligation, of course, it's an obligation, present obligation. BC, third answer is the answer. BC. Next question. 18th question. When Geeta's business purchases goods from Santhiya's business for 50,000 for sale. Geeta is the purchaser. So Geeta is the purchaser. Geeta is purchasing. It says Geeta purchased. Here it says Geeta purchased goods. Purchased goods. Santhya is the supplier. What is the question? For 50,000 for resale. Assets decrease by 50,000. Liabilities increase by 50,000. Geeta's business purchasing goods. It doesn't say for cash. Not for cash. You have to notice these things. It's not for cash. It's not for cash. Geeta is purchasing goods. So goods coming into the business. Stacks. I mean, toga. You buy goods, which means your stocks of goods increase. But cash doesn't decrease because not purchasing for cash, purchasing on credit. It's a credit purchasing, which means assets increase, liability also increase. So the first answer seems okay. Assets decrease. It says decrease. Wrong. Assets increase. Yeah. Liability increase. Yeah. Assets increase. Okay. Liability decrease. No. Assets decrease. No. Assets increase. Liability increase. The answer is the second one. Assets increase and liability increase. Yeah. Purchasing goods from Santi's business. 50,000 for resale. Santi is becoming a creditor. He's becoming a creditor of Geeta. 19th question. Use the following information to answer question number 19 to 20. That is not a problem for us. Use the following information to answer questions 19 to 20. Details of assets and liabilities of Roshana business are given below. Roshana's business. Assets and liabilities. 2018 March 31st. As at March 31st, it is given. What are given? Motor vehicles, assets. Bank loan, liability. Debtors, assets. Creditors, liabilities. Cash, assets. They are asking the value of capital of this business. Oh my god. Value of capital. How to find capital? Assets minus liabilities equals capital. How to find capital? Really? Assets minus liabilities. Yeah, of course. Assets minus liabilities. Assets, we'll use which color? We will use blue color, right? For liabilities, we will use this color. Good. Now we have to use blue for assets. So assets minus liabilities equals what? Capital, equity. So how to find capital? Value of capital is to be found. We take the assets, total of assets, and subtract liabilities. How much is the total of assets? We have motor vehicles 150, 1,50,000, 150,000 plus next asset 20,000, 1,70,000. Next asset 12,000, 1,82,000. 182,000 is the total of assets. How did we get the total? We have motor vehicles, first asset 150. 150 plus, we'll take it from this side, 150 plus 20. 20,000, then 150, 150,000 plus 20,000, it becomes 170,000. 170,000 plus 12,000, 182,000. 182,000 is the assets minus liabilities. How much? Liabilities, how much? We have first liability, bank loan, 50,000 plus 25,000. 50 plus 25, 75,000. Because creditors are the next liability. Bank loan and creditors. 50 plus 25, 75. Minus 75,000. Right? How much is it? The capital becomes how much? The capital becomes 182,000 minus 75,000. 182 minus 75. 7,000. Correct? Correct? Is that the correct answer? Calculation? Yeah. Yeah. Is it there? It's there. 107,000 is the capital. Next question, 10th one. Use the following information to answer the. It's the same information. It's the same information, and 20th question is also. Okay, again we have to write assets. Bank loan is a liability. Debtors assets and cash is the next asset. Liabilities we had only two, no? Bank loan liability and creditors are a liability. Next question is the value of current assets of this business. Current assets. Current assets. Short-term assets. Can't take the motor vehicle because it's a long-term asset. Can't take the bank loan, of course. Bank loan, of course, can't take because it's a liability. We have to find the current assets. Current assets. So we have debtors and cash. 20,000 plus 12,000, 32,000. There you go. Simple questions, right? Oh yeah, very simple. 32,000. Only the motor vehicle is, not taken because it's a long-term asset. Long-term is non-current. We have to find current. So debtors and cash. Next question. The source document and prime book for owners cash drawings. Cash drawings, not a good thing. Not a good thing. Cash taken by the owner for his personal use from the business. It reduces equity. Remember, it reduces equity drawings. But they are not asking about equity. They are asking the source document and prime book. Source document is what? When cash goes out from the business, we as accountants, actually not accountants, the cashier or the whoever is handling cash should issue a receipt. Should issue a receipt, right? No. Receipt is for cash receiving, but cash going out. For that transaction, a payment voucher. Voucher should be issued. So we have the payment voucher right here. And because it's a cash drawing, cash goes out. Cash drawing, cash goes out. Cash book is the prime book. Yeah. Source document and prime book. Payment voucher and cash book. Payment voucher is the source document. Cash book is the prime entry book where you should enter this transaction. What is the transaction? Cash drawing is the transaction. Cash drawing is a transaction. 22nd. Select the correct statement from the following. Oh, the correct statement you have to find. Let's go through the statements. Carriage in words rupees 100 should be recorded in ledger column in petty cash book. That's correct. Carriage in words of some asset to bring the asset. Carriage in words means carrying the whatever you bought to the business premises. Carrying whatever you bought to the business. Let's say you bought a machine, a printing machine from Metropolitan or from Softlogic, whatever the company. From Colombo, you bought the machine. You have to bring it to your shop or the factory. or the printing press, your business. From that point, from the point you purchased to your business or to your factory, carrying the goods or the asset. Carriage inwards. Carriage inwards of the asset should be recorded in the ledger column of the petty cash book. Yeah, it's correct. Come on, man. A is correct. Charity payment of rupees 100 should be recorded in miscellaneous expenses column. Charity payments recorded in the miscellaneous expenses. That is also correct. Yeah, because charity expenses are not a regular expense, not a regular payment. Like, regular payments are like postal expenses, stationery expenses, cleaning expenses, refreshment expenses, traveling. Those are the regular expenses. Charity payments, you don't give charity always, every day, right? So it's a miscellaneous expense. Should be recorded in miscellaneous expenses column. That is correct. 500 paid to Janakan should be recorded in the Janakan column. No, there is no column called Janakan column. If you have a column for every guy, every person that you pay money to, petty cash book will not be the petty cash book. 600 paid to Anu should be recorded in miscellaneous expenses. No, that is also wrong. That is also wrong. Miscellaneous expenses. No. Anu is, let's say, a creditor, just like Janakan. You can't have a column called Anu, or you can't record it in miscellaneous expenses column 2. It should be recorded in ledger column. So AB, fourth answer. AB. Next question. Main objective of preparing a bank reconciliation statement is what? Main objective: confirmation of accuracy of entries, confirmation of the accuracy of the entries, reconciling bank account balance and bank statement balance. That is the answer. Getting the details of unrealized checks, getting the details of unpresented. No, this is the answer. This is the answer, children. Reconciling bank account balance and bank statement balance. That is the purpose of preparing bank. Main objective of preparing bank reconciliation statement. Yeah, that's right. Yeah. 24th, an accounting error which does not create suspense account. An accounting error which does not create suspense account, which means which does not go to suspense account. What is the error? 4 errors are given. Credit side of cash account, cash book. Let's say cash book. Credit side of cash book has been understated by 1,000. If the credit side of the cash book is understated, only credit side has an error. Only credit side has a understatement or shortage. It affects the trial balance. Affecting trial balance means that error is going to the suspense account. 10,000 paid to Arumugam has been recorded in Arumainayagam. Whatever. That error does not affect the trial balance. Because 10,000 paid to Arumugam, it has been recorded in somebody's account. It is recorded in somebody's account. It's not recorded in Arumugam's account. Recorded in Arumainayagam account. Somehow the 10,000 has gone to some account. So the entries, double entry is gone. Okay. Next, so if it doesn't affect the trial balance, it doesn't go to suspense account. Seems like that is the answer. Entry has not been posted to ledger accounts from prime entry. One entry has not been posted to ledger from prime entry. That means it affects. Sales to Siva Raja has not been recorded in his account. That is also one entry missing. That means one entry means it tips off the balance. Trial balance tips off means trial balance is affected, which means suspense account. Yeah, going to suspense account. The question is, we have to select accounting error which does not create, which does not go to the suspense account. Second answer. It's an error of commission. A narration to rectify an accounting error is in the general journal is given. Okay. A narration to rectify an accounting error, general journal, is given here. This is the narration. Here you go. This is the narration. To rectify 9,000 understated in sales account. Narration means, you know what is narration? I can't teach you what is narration here. We are doing a paper. These questions are easy questions, mostly questions in the beginning, like Mulahari. These questions are easy. If it is an easy question, don't take 2 minutes to answer, because you will get how many minutes? Like 1.5 minutes to answer one question. Why is that? Why 1.5 minutes? For the entire paper, you get 60 minutes. 1 hour. For the first paper, MCQ paper, you get 1 hour. 1 hour means 60 minutes. In 60 minutes, you have to finish 40 questions, which means 1 minute and a half. 1.5 minutes. One and a half minutes for the question, for each and every question. But don't take 1.5 minutes if the question is easy. Finish it in like 1 minute, maybe. Don't even take 1 minute, maybe 30 seconds. You can even do a question in 10 seconds if the question is easy, if you know the answer, right? Now, this narration is written in the general journal to rectify or to correct an error. They are asking the correct rectifying entry in connection with the what is the correct double entry to correct this error? What is the error? Rectified the error 9,000 understated in sales account. 9,000 understated in sales account. If the sales account is understated, children, let's say this is the sales account. Okay, if the sales account is understated means in the sales account, total is mentioned lower, like lower than the correct total. How much is lower? 9,000 is understated. 9,000 is lower. So the sales account is always having a credit balance. Sales account is always having a credit balance because sales account is an income. Always in the sales account, entries come to the credit side. Entries come to the credit side. In the credit side, 9,000 is short. 9,000 is short. Short means understated. Understated means short. This side 9,000 is short. If 9,000 is short, you have to put 9,000 to the credit side, which means sales account credit 9,000. And there's no other place there's no other shortage in the debit side. Only the shortage exists in the credit side of the sales account. So this is a one-sided shortage. That means affects the trial balance. Yeah, which means the other entry goes to the suspense. Sales credit, suspense debit. Here we go. Suspense account debit, sales account credit. This is the answer. Suspense account debit, sales account credit. Yep. 25th done. 26th. Select the answer which shows what is calculated from each of the following equation. What is it? Select the answer which shows what is calculated from each of the following equation. Opening stock plus purchases plus purchasing expenses minus closing stock. Okay. What is calculated with this system, with this equation? What is calculated? What? You tell me. You, hey boy, you. Yeah. Tell me what is calculated from this. Come on, man. This is the item. These are the items which come in your what? In your profit or loss account. Top part. Yeah. Remember? Remember? Should remember. Opening stock plus purchases plus purchasing expenses, which means purchasing expenses means carriage inwards. These are the purchasing expenses. Carriage inwards. Inwards. Loading expenses. These are the purchasing expenses, purchase related expenses. And you minus closing stock. You get the, what is the answer? You get the gross profit. No, you get the, who said that? Yes, correct. Cost of goods sold or cost of sales. Cost of goods sold or cost of sales. That is the answer. Answer should be here, no? No, there's a dot line here. That's why I wrote on the dot line, okay? The dot line is here. Cost of sales is the answer. Cost of sales. Sales minus cost of sales, gross profit. Sales minus cost of sales is gross profit. That is the next equation. Oops. Sales minus cost of sales equals gross profit. So the answer is number 1 cost of sales, number 2 gross profit. This is the answer. (26th) done. Moving on. 27th. Use the following information to answer 27 and 28. Okay, use the following information. Following information. What are the information? Following information was taken from the trial balance of Sumantiran business. Okay, Sumantiran. Taken from the trial balance of Sumantiran business. Furniture, 80,000. Provision for depreciation of furniture, 16,000. Provision for depreciation means until now, the depreciation is provided for furniture, 16,000. Until now. Additional information, they give you a depreciation percentage in the additional information. What is the percentage? 10%. Furniture should be depreciated 10% on cost. Take the cost, 80,000 into 10 over 100. Answer is 8,000. Right? Answer is 8,000. That is the additional information which is given for depreciation. Depreciated 10% on cost. This is the cost. We took that and we calculated 10%. We calculated 10%. Okay. Question asks you what? Amount of furniture depreciation to be disclosed in the profit or loss statement, income statement of the business for the year ended 2018 December 31st. Yeah, 2018 December 31st. What is the question? What are they asking? Amount of furniture depreciation to be disclosed, which means they are asking the depreciation which should be in the profit or loss statement as an expense. In the profit or loss statement, you record the expenses of the period for this year, only relevant to this year. You don't take the provision up to this point, which means the previous year's depreciation. Provision means provided depreciation up to now. That means the previous years. You don't take that to the profit and loss statement when calculating profit. You take only the expense or the depreciation expense for this year, which means it is 8,000. Here we go. This is the answer. And we are moving on to the 28th question. Same case, huh? Same case. Use the following information, answer 27, 28, both questions. So this is 28. Amount of provision for depreciation of furniture to be disclosed in the statement of, oh, okay. The amount of provision for depreciation to record in the statement of financial position. In the statement of financial position, which means the balance sheet, the statement of financial position. What? Balance sheet? What? Balance what? Balance sheet. That is the old name of the statement of financial position. So how much should be the provision for depreciation in the statement of financial position as at 31st December with the 8,000 this year's depreciation? You have to add the 16,000. Up to now, for all the years, accumulated depreciation of furniture is 16,000. You don't take that to the profit or loss statement. That is why we took 8,000 as the answer, because this question asks about profit or loss statement. But the next question, the next one asks about the statement of financial position. In that, how much is the provision for depreciation? So what do? You add the 8,000 to 16,000 and the answer is 24,000. Here we go. The provision for depreciation of furniture. Next question. Ramanan is conducting a business in a building that was obtained on monthly rent 2,000. He has taken a building. He has rented a building. The monthly rent is 2,000. Very cheap, no? Monthly rent 2,000. If he has paid 8 months rent only, the value of accrued rent. Okay. Monthly rent is 2,000. Then annual rent for the entire year. Annual rent how much for the year? 2,000 into 12, 24,000. This is the annual rent. Simple calculation. But monthly rent 2000, he has paid 8 months only. 8 months means for 8 months, 2000 monthly into 8 months, 24,000. Sorry, 24,000 is the earlier answer. This answer is 2000 into 8, 16,000. From 24,000, if he has paid 16,000, how much is the remainder? 8,000 is the remainder. That is the accrued. That is the accrued or unpaid rent. 8,000. Got it? 30th question. Residual value of a machine at the end of 10 years is 10,000. Depreciation is 5,000. Cost value of the machine. Okay. Residual value of the machine at the end of 10 years. After 10 years, no. After 10 years, the residual value means the remainder after entire depreciation is deducted from the cost. Remainder is 10,000. After 10 years, remaining 10,000. Remaining from the machine, the remaining value is 10,000. That is the residual value. Okay, at the end of 10 years, 10,000. Annual depreciation 5,000. If annual depreciation is 5,000, 5,000 into 10 years, because it says the value of the machine at the end of residual value of the machine at the end of 10 years. 10 years is the useful life is 10 years. Okay, useful life is 10 years. Annual depreciation is 5,000. Annually 5,000 is depreciated, which means 5,000 into total depreciation how much? Total depreciation how much? 5,000 into 10 years. 5,000 into 10, 50,000. 50,000 is the total depreciation for the entire lifetime of the asset. After 50,000 is depreciated, 10,000 is remaining, which means the cost is 60,000. After 50,000 is deducted from the entire cost of the asset, after 50,000 is deducted, the total depreciation, 10,000 remainder after 10 years. That means 50 plus 10, how much? 60,000 is the cost. The cost. Here we go. 60,000. Next, 31st. Characteristics of some accounts prepared by not-for-profit businesses are as follows. Prepared based on cash basis, similar to income statement. Prepared based on accrual basis, shows the cash balance at the end of income and expenses for the year only are recorded. A, B, C, D, E. The year only are recorded. Select the answer which consists of the characteristics of the income and expenditure account. Income and expenditure account, children, that is the income statement actually. They're talking about the income statement. In your syllabus it says income statement, right? But the question says income and expenditure account. Income and expenditure account or statement means the income statement. Okay, don't get confused now, income statement. They're asking about the income statement of non-profit. How many times did I tell you now? Select the answer which consists of characteristics of income statement. Prepares based on cash basis? No. That is the characteristic of receipts and payments account, not the income statement. Income statement is the profit or loss statement of non-profit organization. Similar to income statement, Correct. Net income statement. Yeah, it is the income statement. Prepared based on accrued basis. Yeah, correct. Show the cash balance at the end of the year. No. Income and expenses for the year only recorded. Yeah, that's also correct. So A, no, B, C, E is the answer. B, C, E. Third is the answer. B, C, E. Got it. Select the word to be filled in the blank of the equation given below. Subscriptions received plus accrued subscriptions. Okay. Subscriptions received. Subscriptions means what? Membership fees of a non-profit organization. Membership fees of a non-profit organization. So subscriptions received means we have received the membership fees. Plus accrued subscriptions means the amount to be received equals total subscriptions or annual subscriptions. Total subscription, or we can say annual subscription income. Here we go. So it's given exactly the way I have written annual subscriptions income. Next, use the following information to answer 33 and 34. Okay, we will use. Okay, fine. Okay, fine. Some information related to furniture manufacturing business for the month of January. Guys, as I always say, 1.5 minutes. For these questions, you can take time if you save time in the beginning with the easy questions. For these, you can take more time. These are from non-profit organizations, financial statements of non-profit organizations, and production cost statements. These questions involve calculations, calculations. So you can take more time. If you save your time in the beginning with the easy questions, not taking 1.5 minutes for those questions. Some information related to manufacturing, furniture manufacturing for the month of January. Total production cost 200,000. Number of Almirah produced 100. Profit margin 20 on cost. Okay. Production cost per unit. Okay, per unit cost. They are asking for cost per unit, which means you take the total cost. You take the total cost 200,000 divide by number of Almirahs produced, divide by 10, you get unit cost. Total cost divided by number of units produced. That means they have spent 200,000 to produce 100 pieces. Then 200,000 divided by 100, you get one piece. How much is it? 20,000. No, 2,000. 2,000 is the answer when you divide. Cut the zeros. 2,000 is the answer. Unit cost. Yeah. Production cost per unit 2,000. I'm sure the next question must be asking about profit or the selling price, because the profit margin is given. Let's see. C, man, selling price. They're asking about selling price now. Selling price of an Almirah. Okay. We'll not do the calculation here. We'll do the calculation here. because the information is here. Okay, selling price. We took the cost per unit, which means producing one piece. The cost of producing one piece, that is 2000. Okay. Now from 2000 cost, you have to calculate the margin of profit. Margin of profit is 20% per unit. 20% on cost from 1 unit, which means from 2000 you have to calculate 20%. Okay, I will do it right here. From 2000 you have to calculate the profit margin, 20%. 20 over 100. Answer is the profit. Unit profit. Answer is the unit profit. Unit profit is 2000 multiplied by 20 over 100. That is 400. Answer is 400. Cut the zeros, cut the zeros. 20 times 20, 400. 400 is the unit profit. From one piece, you keep a profit of 400. Then you have to sell one piece. For how much? 2000 is the cost and 400 is the profit. Add them together, you get 2400. For how much you have to sell one piece? 2400. That is the selling price. 2400. Selling price of one Almera. Easy calculations, right? Easy peasy, lemon squeezy. Here we go. The financial statement questions. Use the following information to do your to answer questions 35 to 40. Income statement and statement of financial position. Income statement and statement of financial position of Imran business, which was started by Imran, investing 200,000, is given for the year ended 31st December 2018. Income statement given here is the income statement. Then statement of financial position given here. This is the statement of financial position. Yeah, okay. What is the question? Cost of sales for the year ended 31st December. Hey, if the income statement is given, what they're saying is, what they mean is, because it's a profit business, income statement and statement of financial position of Imran's business, it doesn't say that it's a non-profit business anywhere in the question. That means it's a profit business. So what they actually mean is, this is the profit or loss statement. What they actually mean by income statement is the profit or loss statement. Okay, profit or loss statement. I'll write it. I'll write it here. This is the profit or loss statement. Actually, children, income statement is another name used for profit or loss statement. Yeah. So don't get confused. This is the profit or loss statement. Okay, profit and loss statement. Yeah, this is the statement of financial position. Now got it? Cost of sales for the year. Wow. If the sales is 200,000, commission received is another income. Commission received is another income. This is another income. Commission received. So, what are they asking now? They're asking about cost of sales for the year. That's what they're asking. Cost of sales for the year. How to find the cost of sales? That we already know. Right? Right? Yeah. How to find cost of sales? Cost of sales equals, guys, this is the upper section of the profit and loss statement, the upper section, the gross profit section. In the gross profit section, opening stock plus purchases. How many times have we done? Plus other purchase related expenses such as carriage inwards and loading unloading minus closing stock. That's it. That is it. That is it. That is the calculation of cost of sales. Okay. To opening stock, you plus purchases plus purchase related other expenses, and minus closing stock. All right. Now, do you have any purchases or purchase related expenses? Yeah, you have. Yeah, you have purchases here and carriage inwards here. Yeah. No opening stock. That is a problem here. No opening stock. So we can't help it. They haven't given any opening stock. What to do? There's nothing we can do. Just add purchases and purchase related expenses 105,000. No other items here. No other items. Salesperson salary, rent, bank loan interest, telephone charges, discounts allowed. These are all other expenses. No? See, rent, interest, charges, telephone charges, discounts allowed. All other expenses not related to cost of sales. So cost of sales only 105,000. Is it there? It's there. 105,000. Yeah, that's it. No need to get your, no need to get your head all messed up. Work with the given items. Next question. It's the same information. Question is gross profit for the year ended. Okay, gross profit. I'm going to go to the previous slide because we have done the workings there. Okay, now opening stock, no, nothing. Opening stock is not given. Purchases 100, purchase related expenses 5,000. So purchases 100,000. Purchase related expenses 5,000. This is carriage. Okay, carriage inwards 5,000, which means the cost of sales we found 105. Cost of sales we found calculated it to be 105,000. How to find gross profit now? That is the question. How to find gross profit? Gross profit gross profit is calculated. How? By sales minus cost of sales. If you put the sales on top right here, if you put sales here, we have the figure for sales here, 200,000. It's simply 200,000 minus the cost of sales, 105,000. 200,000 minus 105,000. You get the gross profit here. How much? 200,000 minus 105,000. 95. 95 is the gross profit. Is it that? Oh no, this is the previous question. We were in this question. Gross profit for the year 95,000. It's here. It is here, right here. 95,000. Easy peasy, right? Lemon squeezy. Income statement, statement of financial, same thing. Total of sales and distribution expenses disclosed in the income statement. Again, I'm telling you children, again, what they mean by income statement is the profit or loss, P&L. What are they asking? Sales and distribution expenses. We have other expenses. Here, these are all other expenses. From among other expenses, salesperson salary is a sales and distribution expense. 1. Rent is not a sales and distribution. Bank loan interest is not a sales and distribution. Telephone charges, not a distribution expense. Discounts allowed is a distribution expense. That's it. Net profit is calculated here. Only two distribution expenses we have. Salesperson salary and discounts allowed, which means 10,000 and 1,000. 10,000 and 1,000. 10,000 plus 1, 11,000. Where is it? Sales and distribution, 11,000 is here, right here. Got it? Moving on. 38. Rent paid during the year. Rent paid during the year. Well, rent paid is given, right? It's here. Rent paid is here. Rent is here. Rent is given. So is it rent paid during the year? Is it 12,000? Rent paid during the year? Is it 12,000? No. No, no, no. No, no, no. They are asking for rent paid. Did you notice this? They are asking for rent paid. Rent paid. Here in the income statement or the profit and loss statement, you have the relevant full total expense for the year. Yeah, it's not the paid value. It's not the amount paid in cash. 12,000 is not the amount paid in cash. It's the full, the total expense relevant for that year. So if it is 12,000, check in the SOFP whether there are any prepaid rent or accrued rent. Accrued rent is here, 2,000. Accrued means unpaid. Accrued means unpaid, right? Accrued means unpaid. It's 2,000. From out of 12,000, 2,000 is unpaid. Which means how much is paid? 10,000 is paid. Only 10,000 is paid. Do you get what I'm saying? Rent is 12,000. Okay, that is the total rent relevant for that year, for that period, not the paid amount. Out of 12,000, accrued, unpaid 2,000 is there. So 12,000 minus 2,000. It's 10,000. That is the paid amount. Rent paid. Yeah. Next one. 39. The increase in equity during the year ended 31st December. Increase in equity. Increase in equity. That's interesting. Increase in equity. Of course, I have told you this. There are no other transactions or events other than these 4 transactions. Only these 4 transactions change equity. Okay. First, additional capital. It increases equity. Drawings taken by the owner decreases equity. Profits or incomes increase equity. Losses or expenses decrease equity. So there are no additional capital introduced in this question. No additional capital introduced. Capital is 230,000, right? 30,000. No additional capital, not given anywhere. No drawings mentioned anywhere. Drawings should be here. No drawings mentioned anywhere here. Only capital is given. Then net profit is given. Now you know if net profit is given, guys, net profit increases capital. So they're asking how much is the increase in equity, increase in capital. 230 is the original capital and 60, there's a 60,000 of a net profit, which means 290,000 when you add these two. 290,000 is the closing equity, like after the capital is added to net profit. Net profit is added to capital. This is the closing capital, closing equity, okay? But the question is not asking for closing equity or closing capital. Increase in equity. How much is increased during the year? Increase is 60,000. Increase is 60,000. Here. You have the answer, 60,000. Capital is increased by the net profit. Last question. Values of non-current liabilities and current assets. Non-current liabilities and current assets. Non-current liabilities. Non-current liabilities are not non-current assets. Non-current liabilities, where do we have? Assets and liabilities we have in the SOFP. On top we have assets. Below we have liabilities. Under liabilities, equity and liabilities, this section, only this is the non-current liability we have. Only this. Bank loan is the only non-current liability. Yeah. No other non-current liabilities. No other non-current liabilities. Only the bank loan is there. Okay. These are all current liabilities. These are all current liabilities. Current. Creditors, accrued interest and accrued rent, all current liabilities. So the non-current liability is 60,000. Okay. 60,000. The bank loan. Plus we have to find current assets too. Assets on top. Among the assets list, motor vehicle is a non-current asset. Furniture, non-current asset. Debtors is current asset. Cash balance is a current asset. Then 34,000 plus 50,000. 84,000. Current assets 84,000. Check the answer. 60 and 84. 60 and 84, 60 and 84, 60 and 84. 60 and 84 is here. 60,000 and 84,000. With that, children, we finish the Northern Province 2019 Business and Accounting paper. Northern Province, right? This is from Jaffna, Kelly, not to those areas. This is the MCQ paper, paper 1 of 2019 from the north, from the Northern Province. Right then, 40th question. We are done with all the questions. The first paper is done. I'm hoping to see you again with the second paper of this, which is the paper 2 of Northern Province 2019, third term, paper 2. I'm going to see you soon. Until then, do your work. Have a good time. Good luck for your exams. See you soon. Bye.
To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.